Doing great. I certainly am. I woke up today. That's always a victory. First one of the day, right? Chef, I love wonderful. Hopefully everything's all right in India. You are staying busy and out of trouble. Good morning, JW. Good to see ya. It is 7:59 in the AM, ladies and gentlemen. Good. Gino, nice to see you this morning. Guys, it's going to be a good day. Life is good, Toby, every day. Every day. Another day. That is a good sign, Joel. I agree 100%. Let's get started on news, guys. Let's make that the first thing that we do each and every day. If you wake up, you open your charts, go to forexfactory.com/calendars. You'll have a leg up on what's happening in the world, the things that may be going on that can make people react. What you'll find, guys, is the market's a very emotional place for a lot of people, and some of these people have really deep pockets. So when news comes out, today is December 13th, Wednesday, there was some red high-impact news coming out at 8:30 a.m. This did make the market bump and jump a little bit, but not a lot. Looks bloody. And Ron's right. It was kind of a dud, but it's not always a dud, right? Yesterday's high-impact news made the market go absolutely crazy. Today's didn't do as much. So, guys, it's kind of like termination conditions. You never know. But it's always a good idea to stay on the right side of things. When high impact, when medium impact news come out, guys, it's typically your best bet. And I don't tell you what to do with your trading. I certainly don't give advice. But it's nice to be able to sidestep that little emotional response and not get caught up in the middle of it. And then Ron's right. At 2 p.m., guys, we got the funds rate, economic projections, FOMC. Good morning, Jim. So I want to talk about that. What does that mean for us? And then at 10:30, we have crude oil inventories. Guys, I'm going to share my line of thinking on a day like today where there's this huge impactful news coming up at 2 o'clock and where there is crude oil inventories happening at 10:30. What you may find as you get closer to that news time is people kind of jockeying for positions, trying to put themselves in the most advantageous spot. So if the news is good, they have one reaction. If the news is bad, they have another. But what you'll notice, and we'll probably see it on crude oil this morning, it's never guaranteed, but I see it a lot. Crude oil inventory days. Good morning, Haji. You'll see them actually begin to jockey for position a little bit. You'll see a little bit of overrun, a little lack of follow through, and it's never guaranteed. But when you know that there's a very impactful news release coming out, it's a very real reality. So just keep eyes. I keep my management hat on when it's a big news day, for sure. And then everything, and I mean everything that you need to be successful, guys. Really, without hesitation, I say that. Everything that you need to be successful with the software comes right from the tutorial section on the education page. When you click this button, up it opens. This is the tutorial. This is where all the rules are. Good morning, Jose to be. Nice to see ya. This is where anything and everything that you could possibly need is going to be for you to find right at your fingertips, guys. And starting with the glossary of common terms, there's some glossaries for some of the common things that you'll see on the charts. One-to-ones, divergence, reversal bar markers, little things about some of the language that's used in the room, termination area, stop, risk, ticks, target profit, all that good stuff. And then what we focus on for the first hour of every classroom that I teach, guys. There was a time in life where I taught a one-on-one class in the afternoons. Good morning, D-Rock. 2 p.m. every day. That was my educational beginning with Nexgen, is I would teach a one-on-one class. And the one-on-one class was designed to build a foundation. The one-on-one class was designed to give you the ability to just read the indicators and know what they're telling you so that you can move forward and really kind of grow with the software. So my first hour every day is dedicated to the same thing. It's designed to cater to the people that are brand new. It's designed to cater to the people that need a little help reading the indicators. It's designed for the people that are looking for consistency right off. So we focus on what's called a high probability trade. It's a high probability trend trade. And it's defined as when each indicator on every chart agrees with the rules for the trade. Typically, this is when all the triggers are their strongest, no termination conditions exist, and there's no trouble between your entry and your target. This high probability trade, the way it's taught in this classroom, is a trade that typically wins 70 to 80% of the time when it comes from what we call a termination condition. When a key Fibonacci area reverses the market, the rules are met. That is your highest chance of success with what we teach. But this trade happens 3 to 4 times a day, maybe. It's not something that's going to happen every second of every day. It's not something that's going to keep you busy for hours on end. This is a trade that literally is the best of the best. This is the cream of the crop, the one that we're looking for. But this trade does more than just give you a consistent winner. It teaches you how to read your indicators. It teaches you how to look at the indicators and discern what they're telling you, to dissect them and get the advantages that we're looking for to enter a trade. It turns you into a chart reader. And when you're a chart reader, you understand 3 very key concepts: where the market is likely to continue, where it's likely to go, and where it's likely to stop. We'll use the first one for entry. We'll use the second one for profits. And then the third one is going to keep you from trading into areas that may reverse the market. It's going to keep you from trading into places where decisions are being made by the people that move the market. So we're going to do this morning. We're going to focus on these 3 rules. That high probability trend trade, guys, where each indicator on every chart agrees with the rules for the trade. And each rule, only 3 of them, provides an advantage for you. If you start speaking to yourself in terms of advantages every time you look at your chart, this is my advantage, this is my advantage, and here's my disadvantage. What it does is it gets you understanding whether or not you're in a trade that you should be calm and let it do what it's going to do, or whether or not it needs to be managed assertively. But these 3 rules, one provides momentum, strong trigger lines. 1, not trading into those areas that may reverse the market, gives you a clear path. And then finally, your entry area defines where the market is most likely to continue. These 3 rules, we're going to go over each look visually, how to recognize it in the moment. It happens on only 2 charts. And 2 charts, really, I'm not going to lie, is all it takes to find this high probability trend trade. Less is more sometimes with trading. Fewer thought process. You're going to use a large chart initially. And the large chart it's a broad stroke of a brush. A large chart is a slow moving chart. A large chart, all you need is the most current bar, the first bar in line on the large chart. And the large chart is going to define the direction of the market, which way you should be trading. The large chart is going to define the momentum of the market. That's that first advantage that comes from rule number 1. And then the large chart will also define the areas. And this is where rule number 2 comes in, making sure that you're not trading into one of those areas on the large chart. When you have direction, momentum, and areas defined in just one bar, it simplifies the process. It makes it easier to get your chart read in. The first 2 rules, momentum and a clear path, happen on the large chart. And when they're met, you can turn your attention to a smaller, faster chart. This is a refinement chart. It takes that broad stroke of the brush, that 1 bar event, and it'll turn it into 15 to 30 bars. It's just a smaller time frame. But by doing so, you will be able to pinpoint where the market is most likely to continue. You'll use that for your entry. Rule number 3 is designed to get you in at the best of the best spot. And by using the smaller, faster chart, by refining that broad stroke of a brush, it's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. So it's only 2 charts, guys, and it's only 3 rules. And I really want you to be okay with keeping it that easy initially. I always tell new users, I always say, man, until you're consistent, until you're good at the easiest, don't try to add more. Don't try to confuse yourself with things. So this is our first hour. We're going to talk about these. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. I'm going to take each one of those advantages. I'm going to break it down. We're going to look at it visually, how to recognize it, what it means to us as traders. And then you guys are going to be given a copy of a plan that's going to help keep you focused on these advantages. I want you guys simulating. One of the biggest objections I get from people when I say, hey, get out there and break a few eggs, simulate, they're like, well, I don't know it well enough to try it. I don't know it well enough to take an attempt. Guys, just do it. Just go ahead and get yourself where you're entering the trade every time you think there's a trade. Because until you know what isn't working, it becomes harder to see what is working. So every time you take a trade, though, you're going to post it in the room. You're gonna send me a picture of it, and you're going to tell me why you did what you did. And we're going to talk about the advantages that were present. We're going to talk about the advantages that weren't present. I need you to show me 2 charts the same way we're looking for it, broad stroke refinement. Show me both of your charts so I can see what's happening on both charts. Tell me why you did what you did. And there are no wrong answers. I can't stress this enough. I get people that take trades outside of the high probability trend trade all day long. And their trades are beautiful. They're brilliant, and they revolve around advantages. But for the new user, you may say to yourself, hey, but Mark, he broke the rule. Don't worry about what someone else is doing. Focus on your path. Focus on your journey with a high probability. Show me where you entered. Very often I find that we can find a better entry. We can find almost the same price with considerably less risk and a much clearer path. And if you show me where you got in, we'll have a discussion about it. Maybe we can work together to find a better one. And then show me where you got out, because getting into the market is the first step. Getting into the market is kind of managing your risk before you ever manage profit. But eventually you will want to manage your profits. You'll want to get the most out of the trade when the indicators are telling you that it's possible. So show me where you get out. Tell me why you got out. Very often, the number one exit criteria for most new users is fear. I was afraid to give some back. I was afraid that it would turn against me. I was afraid. And you're going to get to the point where it's so mechanical, where you simply say, well, my indicators said the market was likely to go to here. Therefore, I held my position until the market got to there. And that's what we're going to work on together, guys, each and every day. So we're going to learn the rules. You're going to simulate. The goal is that you practice the correct rules, because the rules provide a statistical advantage. It's an accumulation of those 3 advantages: momentum, a clear path, and an entry. That creates a trade. One of the biggest and most harmful things that you can do is get lucky on simulator. Get lucky, create this false sense of security with trades that aren't repeatable, that don't have a statistical advantage. Because typically what happens is once you go live, that luck seems to run out. It's almost like they have cameras in your office. We're going to simplify. My whole world revolves around simplicity. It really does. What looks are you going to commit to? Well, ideally, you're going to commit to the high probability trend trade. That should be your first commitment to that entry. But you've got to learn the looks so that they're easy. It's important that you understand what they look like standing still so that you can find them when that market is in motion. And that kind of leads me over to the easiest way to get to where you want to be, the fastest way to get to where you want to be. It begins with posting your trades in the class. And guys, it's scary to put yourself out there. It's scary to be vulnerable. It's scary to post a loser, because then everybody in this room that's going to show up to your house for Christmas dinner is going to laugh at you in front of your grandma. And that's not cool, right? Never happened, guys. Nobody in here knows anybody. It's just a bunch of names with pictures. They might not even be their pictures. There's no way D-Rock is that handsome, right? But he posts charts and he gets feedback, and he could be D-Rock or Z-Rock, or he could be whatever he wanted to be, but he can get that feedback. And that feedback is the key, guys. You've got to know what you're doing right. You've got to know what you're doing wrong. And it's okay to be new. So put yourself out there a little bit. And then use the spreadsheet that Nexgen provided. It's in your Nexgen study plan folder. It's there. It was there when you downloaded your software. If you just don't feel like clicking, here's a copy of mine. You can have it. It's got all the same stuff on it, maybe even a little bit more. But your spreadsheet is your trade journal. Your spreadsheet is where everything that you do, every time you take a trade, you're going to track it. And you're going to go through what advantages did I have? How did I feel? Notes section is for feedback when you drop it in the room. But every morning you're going to study the previous day's trades. Every morning you're going to look at what you did yesterday and you're going to say to yourself, what worked? And you should also ask yourself, what didn't work? What felt easy? What kept you relaxed? What felt forced or made you nervous? In this brief historical study each and every morning, it will prepare you for the day. Guys, it takes 3 to 4 minutes to look at yesterday's trades. But if you maybe had a problem trading in determination conditions, you're going to identify that pattern in yourself, and you're going to be able to work to correct it. If maybe you're trading without momentum, you're going to begin to recognize that pattern through study, and you're going to be able to correct it, and it is going to accelerate the learning. And guys, the average trader probably takes about 10 trades a day, give or take. That is 50 trades a week. That's 200 pictures after 30 days with annotations on it, guys. Your spreadsheet should represent that. Your spreadsheet should be every trade you take, not just the ones that make you feel good, because it's the ones that hurt a little bit. It's the ones that give you that pit in your stomach, the ones that you don't want to show. Those are the ones that are going to foster growth. Those are the ones that are going to get you where you want to be the fastest. So when you look at the spreadsheet, whoops, here we go. I'll pull mine up real quick. First page is your tracking. What did you do? How did you feel? What were the conditions? Did you win? Did you lose? And what did Mark say about it? Your second page is as you develop your plan, creating that recognition. When the rules are met, you present it in the classroom, and I give you that virtual high five, gold star, and I say to you, man, this is such a great trade. This is rules met 100%. Well, then you can drop that into your personal trade setups, guys. And this green section will define your entries. As you go to, you know what, I'm going to hide this. Don't need that one. As you begin to manage your trades, there's a whole section to help you work on getting more out of each movement. And then patterns. Everything we do is patterns, guys. And it was kind of funny. We had a pattern yesterday on crude oil that was almost a perfect visualization of an entry pattern from the user manual that was a picture taken 3 years ago. And they were almost identical down to the fibs. So the market repeats itself a lot. As you begin to recognize these things that are repeating themselves, there's an opportunity for you to record those, to go back and study them. And then I think probably the most important section on this one is the termination conditions. I challenge people all the time, because this is the most broken rule. Number 2 is scroll back on your charts every day. Take pictures of termination conditions. Burn the look into your memory, what it looks like when the market reaches an area that may stop it. And you're going to find that keeps you really on the safe side of things very much. And then finally, there's the third tab. And this is where I've done a little bit of work for you guys. The green section on the third tab is your trades. These are the people that have been using the software. These are the people that have dropped these into the room. They fit the rules that they have designed for themselves. And what it is it's giving you an opportunity to look at these trades, to recognize advantages, and to just kind of study without motion what it looks like to take a great looking trade. Some of these are high probability. Some of these are medium probability. Some of these fall a little bit outside, but it's how you can use the software that suits your needs is what we're looking for. Some people like to trade the NASDAQ. The NASDAQ moves about 10 times faster than crude or the S&P. And if you're not comfortable with your rules, the NASDAQ will chew you up and spit you out. I think it's better to learn your rules on a slower market first and then work your way into that more difficult market. There's a section on management, just things that I've taken from the classroom to help you guys. Here's a great one. It says, Chef trusts the large chart. What does that mean? It means that Chef had all the momentum in the world. We're going to talk about it. And he allowed that momentum, despite fluctuations on a small chart, to carry him all the way to his target. So that's a great management thing. And I'm sure Chef has that picture in his management section, but it was such a great example of holding for the bigger move. I put it in this one for all of you guys to steal as well. I've taken pictures of an awful lot of the patterns that repeat themselves just to give you a head start. And then here's the termination conditions, guys. I've started that one as well. But fill your section, get your reps in, get your favorite look section to where just fill it. Run out of colors. The more pictures you take, the more you annotate, the easier this becomes, the faster you get to where you want to be. So, post your trades in class. Use that spreadsheet, guys. Those are the two things, the fastest way to get to where you want to be. Is there anyone in this room that's not comfortable or capable of taking a picture and posting it in the room? If you're not, this is a great opportunity for you to ask for a little help. I'm going to give it anyway, just because that's what I do. I took everything off my S&P, and I'm going to bring up my Capture software. Capture software was given to you when you downloaded the software. And I'm going to take two charts. Click this giant Capture button. And this is real important for getting the best feedback ever, guys. You're going to go from the top left to the bottom right, click and drag. And when you release it, Capture is going to ask you to capture an image. A little heads up for you guys that are already at that trading and you're really focused on following rules. Capture a video. Right as you get into the market, capture a video and talk yourself through the trade. Talk about the advantages that you have. Talk about what you see, what you think, what you feel. You will be amazed at what comes out of your mouth in a trade. It's kind of cool. But I'm going to capture an image. And when I capture an image, it gives me both charts. It gives me the timestamps. It gives me the prices so I can do the correlation between the two. Use arrows if maybe you're pointing out a specific area. Use shapes if there is something that you want to talk about, something that was of a concern. But the most important thing that you can do is this call out button. Left click and drag down. It'll give you a big box. This is where we have a conversation, guys. This is where you tell me why you did what you did. This is where you tell me why you got in where you got in, why you got out where you got out. And when you have all this, just click copy and paste it right into the chat box, guys. And then wait patiently. The second hour is when I start looking at these pictures and talking to you about them. And then if you need a little more help with it or you don't want to try it on your own at first, but I know most of your salespeople walk you through the process, there is a whole section right here in the user guide on how to go through that exact same process that I just talked about. So don't skip this part of it. It's so important. And it's actually a lot of fun. It creates some really great conversations. But I want to talk about a high probability trend trade, guys. I want to focus on this best of the best trade where every indicator agrees with the trade. Remember that it's going to be 3 rules. Momentum, clear path, and an entry area are the advantages they provide. It happens on only 2 charts, and the large chart leads the way. Your first 2 rules are going to happen on the large chart. And your first rule says that you must have strong triggers. Strong triggers on a large chart, your trigger lines must agree with the color of the background. So if the background is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trades short. And guys, if you never fight the trend, you'll find that it will eliminate a very considerable amount of mistakes from your day. And rule number 1 says strong triggers. Strong triggers can only be had if your trigger lines match the color of the background. So if the background is green, your small triggers, those solid lines, and your large triggers, those dashed lines, they have to be green as well. And if they're not, it's impossible to have rule number 1 met. Strong triggers means that your small triggers break above and away from your large triggers. And it's that space between the two. I liken it to scissors opening, because when scissors are open, you're capable of cutting. You can get the work done. It's that separation between the two. Both are wide and angled in the direction of the trend. Guys, this is your strong trigger look. When you have a strong trigger look, the odds are favorable for the market to continue in the direction of the trend. This is your first advantage, the advantage of momentum. And when you have it, that is when it is most favorable on a smaller, faster chart to buy Fibonacci support. You'll see it on a large chart. That 1 bar event is one of these tails, or wicks, as some people call them. You're going to be able to pinpoint exactly where the bottom of that tail is most likely to happen. This becomes your entry for the highest probability trend trade. So as you go back and study the methodology, as you begin to build trust with it, you'll be able to go back and circle these tails on a large chart and see if they fit the rules for entry on a smaller, faster chart. In a downtrend, when my background is red, my small triggers must be red, my large triggers must be red. And the separation between the two, the space created like scissors opening, lets me know that the odds are favorable for the market to continue down. And again, this is the most favorable look for selling Fibonacci resistance on that smaller, faster chart. So guys, this is your strong trigger look, and the opposite of strong is weak. When the small triggers return to and work their way inside of the large triggers, this is a weakening of the large triggers. Anything can happen up or down. You go from the confidence inspiring, odds favorable, to the anything can happen scenario. And you'll see this anything can happen as you approach these key areas. You'll see it as the market is preparing to reverse, whether it's at an area or not. And I opened up my S&P. Actually, I did this on every chart because I want you to see. Right now, it's in a huge grind. Smalls are a little bit outside. There's one of your tails, and the market continues up. There's your anything can happen, gives a little push. There's your odds favorable. You have a tail, and right before the large triggers swallow them, you have another tail. Guys, this look is going to repeat itself throughout the day. Anything can happen precedes a reversal. Odds favorable with a tail pushes you in the direction of the trade. Odds favorable, but no tail, no potential entry. Sometimes the money isn't ours. Odds favorable with a tail, odds favorable that pushes up, guys. This is a look where the market gets caught in between areas. When you see it bounce up and down with no real follow through. And then if you back up just a little bit, that odds favorable pushes up. It weakens, pushes lower, but continues the move up until it ultimately reverses. Guys, odds favorable momentum should lead the way. Odds favorable momentum will break areas. Odds favorable momentum will push the market up right until those triggers weaken and look at the reversal. Odds favorable pushes the market up. The triggers weaken. There's a deeper pushback, and ultimately the market continues. Odds favorable, it pushes down, it begins to weaken, dances a little bit, and then works its way back down. And guys, you see this all day, every day. Odds favorable, there's a big push. Odds favorable, there's a big push. Why am I sounding like a broken record on odds favorable momentum? Because that first advantage, guys, it covers mistakes. It creates this amazing feeling of confidence to hold for bigger targets, to get into the market when it's the absolute best of the best. But the challenge is it doesn't happen all day. We just saw that. Odds favorable may push the market down right up to anything can happen. And when you get anything can happen, you have to respect that loss of momentum. You may get a deeper push. You may get a reversal from a key area. But the reality is the advantage goes away. Ultimately, odds favorable comes back. There's a tail of potential entry to weak, to strong in a tail, to indecision, guys. And we saw this on crude oil, where the small and the large don't agree. They're not the same color. Or maybe your small and the large don't agree with the background color. It's impossible to have odds favorable momentum. It's impossible to have strong triggers if the colors don't agree. This is a transition phase. This is where buyers and sellers are duking it out for supremacy, guys. This is where the typical trader tries to predict whether the market's going to go up or down. They try to predict what's going to happen rather than allowing their indicators to tell them what is happening. Guys, a lot of money gets lost in these consolidation areas. You don't have to be one of the people losing it, because if you sit on your hands and let them fight, eventually you'll get back to odds favorable. So is everybody cool with rule number one? Strong triggers sets the tone. Strong triggers break things. Strong triggers give you the advantage of momentum, guys, and you should never go looking for a clear path if you don't have the momentum as a brand new user. And then once you have the momentum, we want to make sure that we're not trading into a line on that key, on those big charts. Make sure that we're not trading into areas that may reverse the market. The areas that may reverse the market are fibs, red or blue, resistance or support, yellow 1-to-1 dots, and those divergence high and low lines, magenta lines from a high, cyan lines from a low. Divergence is just a clever way of saying momentum was lost. If the market goes up and down, some calculations behind the scenes run, and if there is a loss of momentum in that up move, you'll see a magenta line. And if the market goes from down to up and there's a loss of momentum in that down move, you'll see a cyan line. That's all it means. There's a loss of momentum. But when price returns to one of these lines, it can be a very definite line in the sand, and it may proceed a reversal. So we're going to talk about the recipe for a high probability or for a termination condition. I am going to put a template back on so that we can see some lines. But it's a pretty simple process, and I'm going to go to the tops and bottoms section in the user guide. Remember I said everything that you need is in here. There's your trigger lines defining momentum. Right behind it, we're going to talk about those termination conditions, and it's a pretty simple recipe. Price reaches an area. I love that phrase because it's simple. What does it mean? It means that your dynamic price bars reach an area. That's it. Because if decisions are made at fibs, if decisions are made at one-to-ones, price has to get there to start the process of making a decision. When price reaches support, if the trigger lines remain above support, sit on your hands and do nothing. It may create a bounce. It may reverse the market. It may create one of those fights that we don't want to be caught in. The reality is we just don't know. I don't know what's going to happen, guys. I can't predict the future. If I did, I would have won that $1 billion lotto, and I wouldn't be here right now. But what I can say is that if price reaches an area, and if it's support, my triggers remain above, I can sit on my hands and do nothing. And if price reaches the divergence low, and the triggers remain above, I don't know if it's going to bounce, spike, reverse, so I can sit on my hands and do nothing. And if price reaches resistance and the triggers remain below, I don't know if resistance is going to break. My trigger lines say I need to wait. I'm glad that I did because look at the push all the way back to Fibonacci support. Another one of those key areas where decisions are being made. The trigger lines remain above support, so I'm not going short into support. And I'm sitting on my hands because I can't go long into resistance that may stop the market, and I can't go short into support that is stopping the market. So I'm waiting. I'm in this holding pattern. 90% of my day is spent reading indicators. The market comes back up to resistance, to a divergence high, to another resistance, and not one of my trigger lines is capable of getting above these areas. I know that I'm not going long, but it's a little soon for shorts until my small triggers get below the large off of that key area that just reversed the market. Price hasn't reached the next Fibonacci area, so my path is clear. Rules 1 and 2 are met. And there's one of those tails, guys. There's one of those potential pullbacks on a smaller, faster chart. This is your highest probability trend trade, guys. And it's the nothing that you do here that's going to allow you to capitalize when the conditions are met, when the rules are met, when the advantages are in place. So simple recipe. I'm going to pull up a couple pictures for you guys. Termination conditions always begins with price reaches an area. It always begins with price reaches an area. If price reaches Fibonacci resistance and all of the trigger lines remain below, sit on your hands and do nothing. The area isn't broken. The path isn't clear. And it really is that simple. If both the small and the large triggers get to the other side of the area that you're waiting for the reaction on, if both small and large clear this area of resistance, now the area is broken, now the path is clear. And it really is that black and white for new users. The area either is not broken or it is broken. And this is the only scenario for a high probability trend trade, is to have that clear path, rule number 2 met. But there's a scenario that will happen. And this is what we call a 50-50 look, guys. And 50-50 is a commentary on the position of your trigger lines. When your small triggers absolutely crush through an area and you have odds favorable momentum, because remember, strong triggers can break things. This 69.80 area now has the potential to break. break. It's not broken yet because the small and large aren't on the other side, but it has the potential to break. And because of that potential, we can use the advantage of momentum, and we can use the perfect entry, and we kind of omit the clear path because we're banking on that momentum. We're banking on that potential to break. This will be your first medium probability trade, a trade where almost all the indicators line up for a trade. However, a small issue exists. Your small issue will be that the path is not clear, which means that you are going to be adamant about having momentum. You are going to be adamant about the perfect entry on your smaller, faster chart. I'm going to give you a plan to take this one. But initially, and guys, give me a Y in the room if you're with me. If price reaches an area and the triggers don't break, sit on your hands. Wait for the reaction. If both small and large get to the other side, your path is clear, guys. And clear paths make for easy trading. They really do. Decisions are made at fibs. Money is made in between the areas. I put a couple pictures in the room for you. They're already dropped in there, but this just reminds you the recipe, guys. Termination conditions at a high. This divergence line prints because of a loss of momentum. It doesn't mean that this is a termination. What it means is that there's a loss of momentum. But remember the recipe. Price reaches the divergence high. The triggers remain below. Now it's a termination condition. Price reaches resistance. Even with odds favorable momentum, the triggers remain below. It's a termination condition. Visually, this is what you want to get into your head. Price reaches yellow 1-to-1s and resistance. The triggers remain below. Guys, those are termination conditions. And then if you see them at a high, you're going to see them at a low. Price reaches yellow 1-to-1s. The triggers remain above. It's a termination. Notice that I'm leading with price reaches each and every time. This is such an important part of what we do. Price reaches support. The triggers remain above. No short trades. Guys, you're keeping yourself out of trading into areas that may reverse the market. Price reaches a divergence low. Triggers remain above. No more short trades. Guys, it's a simple recipe to stay on the right side of things. And then, of course, I have to ask the question the same way I did with trend. What if you insisted on a clear path? And this is for my more versed users, for you people that are doing well but maybe having troubles. What if you waited for a clear path? Would it make your trading more profitable? My answer was a resounding yes. If I simply waited for an area to clear rather than hoping that it cleared, it removed an awful lot of problems from my trading. It can remove an awful lot of problems from yours. So let's go back to the user guide. There's one more picture that I want to give. And guys, this is the picture that I vandalize and I mark up every day because this is the greatest reminder that you'll spend more time doing nothing than you will doing something. Because when price is pushing down, when the momentum is its strongest, everything says the market is likely to continue. Even support breaks. Small and large get to the other side of support, and then it goes headfirst into these yellow 1-to-1s. And when it does, all of my brilliant students ask themselves, where are the trigger lines? And they remain above those yellow 1-to-1s, and not one of you takes a short trade into that area. All of you say, hey, my path isn't clear. Let me sit on my hands and gauge the reaction. And the buyers push hard right off that area. None of my Nexgen users get stopped out hoping that an area breaks. But you'll notice that all the triggers remain below this resistance, which means that it's too soon for a long. I don't have a clear path to the downside, so rules 1 and 2 aren't met while the people in charge duke it out. This is 90% of your day, guys. 90% of your day is spent waiting for a statistical advantage, waiting for the rules to be met. And if you can do absolutely nothing when there's nothing to do, eventually, it happens all the time, you get odds favorable momentum. And when you do, you realize that small and large broke resistance, it's behaving as support. You have room to your next target. And there's one of those tails. There's one of those potential entries on a smaller, faster chart. This tail represents the 10%, guys. This is where high probability trend traders get paid. And if you don't lose $1,000 hoping, wishing, wanting, it's easier to hold on to the profits from this one. So, guys, that's not 0%. That's not enough. It's got to be 10%. 0% is no good at all. There we go. So this is your little reminder. It's okay to do nothing. You don't have to be active every second of every day. In fact, you're probably going to be more profitable if you're not active every second of every day. So guys, that's using a line on the large chart. That's making sure that your large chart is defining areas. Large chart has defined direction. It told us that we were going up in this particular chart. Large chart defined momentum. It gave me the odds favorable momentum look. Large chart defined areas. It told me that this resistance was broken because of my trigger line position. And it told me that this area in the distance is a target, not a termination condition because price hasn't reached it. There's one other termination condition I want to talk about, and this one doesn't use areas, and it's not on a large chart, guys. And this one uses the divergence, that loss of momentum. And your smaller, faster chart can help you see change that the large chart can't show because it's so slow. You'll see it at a low, maybe a clear path, everything says down and the market goes up. Maybe you have an uptrend with odds favorable momentum and the market seems to go down out of nowhere. This next termination condition is going to help you identify that change by using divergence on the smaller, faster chart. 3 divergences in the same price range may terminate the trend. Notice that we use the word may, likely, could, not should, not will, not absolutely. But if the potential is there, well, then the advantage goes away. So 3 divergences in the same price range may terminate the trend. That's a big red flag saying, hey, no more shorts. 3 divergences in the same price range from a high, no more longs, guys. Let it sort itself out. It may continue in the direction of the trend, but this has the potential to push you beyond intelligent stop placement. This becomes more powerful when the small triggers work their way inside of the large triggers. When you get those anything can happen triggers, visually you see the loss of momentum through divergence as well as trigger lines. And it becomes even more powerful still if your third pivot from a low is higher than the previous, creates what we call a head and shoulders pattern. It means that price couldn't even match the previous pivot and you're losing momentum. Same thing from a high. Lower than the previous. You're going to see this look at a low, this look at a high, and let me give you a copy of this in the room. Maybe put this in your spreadsheet under termination conditions. You're going to see these looks when your large chart is switching direction on you, but you can't see it because it's such a slow chart. Remember, 15 to 30 bars in each one of these bars typically. And that's a smaller, faster chart. That's the only time I'm not using a large chart to define a termination condition. And it's the only termination condition that I give any credit on a smaller, faster chart. So large chart said up, large chart said momentum, large chart said nothing in the way, guys. Let's refine that broad stroke of a brush. Let's go to a smaller, faster chart. And let's define where the market is most likely to continue. Whether it's an uptrend or a downtrend, the rules are the same. Whether the market has odds favorable in a green background or odds favorable in a red background, the idea is going to be the same, guys. The large chart leads the way. The large chart defines direction, momentum, and areas. So the rules must be met on the large chart. We're going to do a short trade today. We did a long trade yesterday. The first step in the refinement, and you know what? Let me talk about the rule before we go into the first step. Rule number 3 says that I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. I'm going to use a limit order, meaning that I'm literally going to wait for the market to come to me. And I'm going to use that limit order. It's going to be in an area. So we're going to use the lines, the way we use them to define termination conditions on the large chart, we're going to use them to create bounce points on the small chart. I'm going to use a limit order at an area, but I want those areas to be nestled inside of favorable large triggers. Favorable large triggers means that your large triggers, those smooth dashed lines, and your synthetic triggers, those stepped dashed lines. The synthetic triggers are the large triggers from the large chart. When these two are working harmoniously, when these two are overlapped, one on top of the other, when they are wide and angled in the direction of the trend, We call this favorable large triggers, guys, and we call it favorable large triggers because this creates your smallest window of opportunity, the smallest point where the market is likely to continue. The tighter they are on top of each other, the less risk you're going to have. The more they are splayed out, the more they break away from one another, the more risk you're going to have. The larger your potential bounce point becomes. So there's a big difference between split triggers and odds favorable triggers. One is a huge advantage with a minimal risk. One creates a lot of guesswork and the potential for enormous risk. So as a brand new user, focus on favorable large triggers. We're going to look for the areas that fall within. And we're going to do it, and there's a couple steps that make it happen. And I want to remind you, large chart defines direction, area, and momentum. Small chart is just an entry chart. Large chart tells me what the large crowd wants to have happen, the people that move the market. Small chart are the people that fight the market, people willing to go short against an uptrend, people willing to go long against a downtrend, people taking profits in the middle. They create what we call a retracement, a little pushback, counter the underlying trend. We take advantage of this as Nexgen users, and we do it by letting the rules be met on the large chart, momentum, clear path, everything says down, and we're going to let the small crowd do their thing, guys, and it begins with the reversal bar. And that's it. It's signaling the reversal, that little pushback against price. And that's all you're looking for. You're waiting. You're like, I know I need to take a trade, but I'm going to wait for the reversal bar. After the reversal bar, the top line of the large and the synthetic. And this defines the range where you're going to look for areas. And then from that bigger range, you're going to refine it even more. From the lowest point of support, the lowest point of resistance to the highest point of resistance inside of favorable large triggers. So resistance can be Fibonacci, red for shorts, blue for longs. It can be a mid-band, magenta for shorts, green for longs. Or it can be yellow 1-to-1s. Those will remain constant color. But your window is from the closest point of resistance to the farthest point of resistance to price. This is where the market is most likely to continue. This is your bounce point. So once you've defined your bounce point, you're going to activate a limit order. And guys, you're going to get to the point to where you can do this in a matter of seconds. You're going to activate a limit order. Right-click on your chart, and you're going to say, I will sell the market if it pushes back to this lowest point of resistance inside of favorable large triggers. You're going to light a candle, rub the rosary, whatever you need to do. But at this point, you've done all you can do. You've given yourself the advantage of momentum, of a clear path. You waited for the reversal bar, you looked for your triggers in the areas within, and you've activated a limit order. And the market's either going to run away without you, or it's going to hit your limit order. And if it does hit your limit order, you're now in a short position with odds favorable momentum. You're in a short position with absolutely nothing in the way. And you're in a short position with an area inside of favorable large triggers that shows you exactly where the market is most likely to continue. This is the same look whether you're going up or down. The user guide has the look to the upside, and I'm going to show you guys. And I'm going to fast forward a little bit, and we're going to pull up this picture. But the process is exactly the same, and we can go through the whole thing in one picture here. The large chart said the market was going up. The large chart said that I had odds favorable momentum, and the large chart said that there was nothing in the way. So I waited for the reversal bar on my smaller, faster chart. This signals the beginning of a pushback. At the time of the reversal bar, I looked from the top line of my triggers to the bottom line of my triggers. And it's within this big white shaded box that I'm looking for my areas. For a long trade, I'm looking for fibs, mid-bands, yellow 1-to-1s that are closest to price. It happens to be a mid-band. And I'm looking for fibs, mid-bands, or yellow 1-to-1s furthest from price. And it happens to be 1-to-1s. And this white shaded box is where the market is most likely to continue. And if the trading gods make the decision that they're going to allow the pushback, that they're going to grace me with a pullback all the way to the highest point of support, I'm in a long trade. I have the advantage of momentum, of a clear path, and now I'm in the market where the market is most likely to continue. Can you guys give me a why in the room if you're with me on this? If you can, if you're following the logic. And if you're on day 1, day 2, day 3, it takes a little work. But I'm telling you right now, guys, if you can learn to define this entry, the best of the best spot, it will reduce your risk. Because if you know where the market should go, where it should continue, the amazing thing is you know where it shouldn't go. And you'll place a protective stop 4 or 5 ticks outside of the window of opportunity. Because we're not in control. We never have been, we never will be. If the market pushes to the bottom of the window, we're Coolsville, guys. Everything is great. We're still in the window. Life is good. The advantages are present. But if the market decides to push beyond that window, we're going to wait for it with a protective stop, and we're going to make it come to us. Because now my advantage is gone. My advantage for continuation is gone. And anything that wins 70 to 80% of the time, guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. I want you to go ahead and become okay with the idea that you're probably not going to take 100% winners. Become okay with the idea that small losses are a normal part of the positive equity curve. Be okay with the idea that you had every advantage and those sons of guns just pushed it lower. Dust off, get ready to take the next trade. But I want you to focus on this entry. Give me 20 days, 2 weeks, 7 days, however long it takes you to get good at it. Because when you start nailing this entry, 70 to 80% of the time when your rules are met, this is your outcome. Profit target reached. You knew where the market shouldn't go and you had a protective stop. And when it started doing what it was supposed to do, you get a reversal bar in the direction of the trade, you're able to reduce risk even further. This trade has every advantage. Every indicator on every chart agrees for the rules for the trade, guys. Triggers are their strongest. There's nothing between you and your target. If you focus on this entry for 20 days, you'll be absolutely amazed at what you come up with. It becomes a very manageable opportunity. You can use those tails on the large chart to identify with odds favorable momentum and everything says up. Look how price pulls right back to support inside of favorable large triggers. Pretty outstanding, right? This is the pattern that repeats itself every day, over and over. Strong triggers can break things with odds favorable momentum and everything going up. What'd you do here, crude oil? Crude oil pulled right back to support inside of favorable large triggers. Once again, you can circle the tails on the large chart with rules met and see if they were met on the small chart. We're using these tails to create a little bit of trust, to recognize the look when the market isn't moving, to understand that these advantages set us up for an entry, not the other way around. Guys, this is your high probability trend trade. This is your focus for the first couple weeks. This is the one that creates confidence through the memory of success. This is the trade that's going to make you a chart reader. So I'm going to give you a checklist that allows you, whoops, wrong screen, to police yourself. This is what I'm looking for to enter a trade. All this does is define an entry. It doesn't tell me what to do with that entry. It just says, hey, this is how you're getting in. Is the market coming from a good top or bottom? Was there a termination that reversed the market? If there was, check yes. If there wasn't, that's okay. You're just going to have to use those 3 divergences to manage potentially. Is overrun near a top or bottom considered good? So you're asking if the trigger lines break through an area and then it reverses, is that a good top or bottom? Gino, I'm going to look at this. I'm going to answer that 2 ways. I feel like a politician. I'm going to cover your question, but I'm going to talk about it in a 2-part series that keeps me from being committed one way or another. So when I talk about a strong top or bottom, Gino, when I talk about the absolute best of the best look, the oh my gosh, I've got tingles, this is such an amazing top or bottom, I want a no triggers through, price reaches, termination condition. I want 100% textbook. And then from that termination, I want to see a reversal. This is the most basic way for the brand new user, Gino. This is the one that eliminates the guesswork. This is the one that keeps you from going, I think it is, it might be, is that too much? Is it not enough? Is that a little bit? Is that tons? Right? This really keeps it black and white for the new user. And this is kind of the recipe for the new user. And then, of course, that is crazy overrun. That's an area that broke, right? Do you see it? That's not a good bottom. I don't care who you are. That's not a good bottom. But sometimes you'll get something. Well, these terminations are freaking amazing, aren't they? Sometimes, and let's see what this looked like at 21.29, where the small triggers do break it a little bit. Let me back it up here. See if we can accelerate that back pedal. I think that your chart reading will allow you to understand when it was just a little bit of overrun. So, and that's not a great example. So let me show you from the user guide what I'm talking about. So Gino, let's say that your small triggers break through a little bit, right? And you're like, oh, it's not a perfect no triggers through. But then in that exact same location where you get a little bit of overrun, 3 divergences print. And this kind of confirms to you, hey, Gino, that was probably just a little bit of momentum that was hard to stop. They overran the fib a little bit. 3 divergences kind of confirms that it was overrun. Let's call it a good bottom. Does that make sense? That's kind of the next step. Something like this, I'm not calling that a good top. Just not going to do it. And you'll notice that the 50-50 trade after it pushed way up. ES right now, let's take a look. Let me put my indicators back on there. And guys, this is great. If you're watching the market and you have a question about the read, let's talk about it. Yeah, smalls didn't break, large didn't break. That's no triggers through, Gino. I love it. And it created the reversal. And it gave me strong triggers. But what's the challenge that we're running into right now? Price reaches Fibonacci resistance and not one trigger line has broken through, right? Is it okay to sit on your hands and do nothing for a minute rather than trying to predict? You've already had one big bounce. Is it going to bounce again? Is it going to hold? Hell, Gino, I don't know. But you're right. That is awesome. That's just a tiny little bit of overrun. The areas are good, but sometimes it happens. So, Gino, great question. The black and white answer is let it be a no triggers termination. And then as you grow with the software, as you begin to recognize patterns, you may find ideas that are a little different. And then Chef. Well, Chef, you're still in December, brother. And we rolled to March a week and a half ago. While you were jet setting around the world, we were rolling contracts. But that's why right there, you're at 1223. S&P is trading the 324 contract right now. But it makes a difference, right? It's a totally different market. Great question, Gina. Thank you for that. Check my 5-1. Oh my gosh, you're right. You know what? I fixed it yesterday, but then I accidentally deleted a chart, so I didn't save my workspace. Man, good catch, Chef. Apparently, while you were jet setting, I was making mistakes too. Thank you for that. See, guys, I'm human, just like the rest of you. So here's a trend trade checklist. Is the market coming from a good top or bottom? If it is, outstanding. Mark yes. If it isn't, you may have to use those three divergences to manage a little bit. Do I have odds favorable momentum? And I put on both charts on my checklist because I want strong triggers on both. No terminations, area inside. Never in the history of the checklist had anybody mark yes to every one of these and do worse than 70%, guys. Not once. Never had anyone do it. And I'm telling you, I've had some engineers take this methodology, back test it over a year, and they were closer to the mid 90s. The problem is you got to be patient. You got to wait for this one. So these are the great things that get you into a trade, guys. These are the conditions that have you entering the market. You should print this checklist out. You should put it on your desktop, and you should get in the habit of making sure that you're following the rules, because the rules create a statistical advantage. You can also, when you annotate a chart, start getting in the habit of writing the rules on the chart. Create the visual with the words. You'll see a lot of people in this room that'll copy paste the actual checklist on their charts. Guys, I think that's wonderful. But if you struggle with breaking your rules, typing them out creates an advantage. Having to physically write out, I had strong trigger lines, rather than just phoning it in and saying, well, sure I did. I marked yes, it must be true. And you guys know who I'm talking to. You guys that say you have a clear path when you don't. You guys that say you have odds favorable when you don't. You guys that say that the area is inside of favorable large triggers when it isn't. It may create an advantage and a learning curve reduction if you take the time to type the words out on the chart. And then I've got another one. I know, Joel, because I did it. Guys, I've broken everything that can ever be broken as a day trader, but I've also learned how to fix it, and that's what I share with you guys. Here's the same checklist, but this checklist has all the visuals, guys, straight from the learning guide. What is a good top or bottom? And of course, Gino, there's the perfect look. What's odds favorable momentum? What isn't odds favorable momentum? Is it a termination? Is it a clear path? Does it have the potential to break? And there's a couple. This is my favorite because this one goes through the windows of opportunity, guys. And I firmly believe when you learn to get in at the right spot, it's easier to make money. Great entries create manageable trades. So I dropped this one in the room for you as well. So now you have this one to put on your computer, study it in the morning, make sure you're comfortable. Now you have this one to police yourself. And yes, I do have a checklist printed out in front of me every day. I have the reasons for trading on my desk every day. And it changes all the time. That's my desk. It changes all the time because I'm always learning. I'm always recognizing advantages. I'm always looking for patterns. So guys, use a checklist, create a checklist, do whatever you have to do to help you with those consistent entries. And then finally, I'm going to give you the KISS plan, the Keep It Simple plan. Take a sip of water though. This plan is a stepping stone in your learning journey. This is not the end of the road for most of you guys. It's designed to optimize your chances of success with the high probability trend trade or that 50-50 trade, that medium probability trade where an area has the potential to break. And guys, what I have done through my own pain, suffering, blood, sweat, and tears is I've given you the best chance of success. We've created the checklists. It wasn't really me. It's actually you guys that created this. I just had to take all the common mistakes. Through simulation, through study, through class feedback, and through continuous practice, you're going to create your own plan, guys. You are going to grow outside of the need for me. You're going to create a plan that suits your needs. Whether you have different pain tolerances for risk, whether you like to hold for bigger moves, whether you're the kind of person that just wants to scalp $100 at a time, you're going to create your own plan based on your ability to read the indicators. This teaches you to read your indicators. So start simple. Get good at becoming a chart reader. The simple plan for consistency. Never fight the large chart direction or triggers. If the large chart says up, don't go down. Not telling you what to do. This is your simple plan for consistency should you choose to follow this plan. If the large chart says down, don't try to go up. And this is where opinions are made, guys. And let me show you exactly what opinions look like. I have a blue line, therefore I'm going long. Well, it didn't work. I have a red line. I'm going to go short right here until I get stopped out and watch it run. I'm going to go short at this red line and get a loser. I'm going to go short at this red line. I'm going to go short at this red line and this red line. When really, you should be going long at this blue line and going long at this blue line. Guys, let your thinking fall in line with what the market's telling you that it's doing, rather than your opinion of what you hope it does. Define your entry. All you need is 20 days of getting in at the right spot, and everything's going to fall into place. All you need is defining your entry. Get good at your entry. Make it so you never hesitate on your entry. Establish trust. And then you're going to do something with that great entry, guys. In the same way you're using a mechanical checklist for entries, you're going to use a mechanical checklist for exits, for getting out of the market, for pulling your positions. And then there's that magic phrase again. You will craft a plan tailored to your personal goals based on your experience reading the indicators. So every great trade for the new user starts with an entry at an area inside of favorable large triggers. This is the precursor for doing everything, guys. This creates a manageable trade because not only do you have every advantage in place, you've defined where the market's likely to continue, and your stop is where it shouldn't go. And there's nothing for you to do at this point. You are either going to get stopped out, normal part of a positive equity curve, a little painful in the beginning, but it gets easier when you trust your rules, or you're not going to get stopped out, and the market gods are going to bless you with a reversal bar in the direction of the trade. At which point you will reduce your risk to a tick or two above that reversal bar, or if it's a long trade, a tick or two below. This is your new stop. And then once again, there's nothing for you to do. Put your hands in the air, roll your chair back, and just wait. Remember that you have the advantage of momentum. You have the advantage of a clear path. You're only refining your entry. You have a little less risk and every advantage, and let's see if it hits target one. If it does, your first of two contracts comes off at $100. Man, that bugs a lot of people. Mark, it's only $100. $100 isn't a bad deal, guys. There's nobody in this room that would be upset if I mailed you a $100 bill right now. But here's the cool thing. Is not only did you make $100, but you're going to move your stop to break even. So you have $100 and absolutely no risk, which means that you got paid. Your sweaty palms dried up. That 145 pulse rate's back down to the 90s. And you're feeling good about the idea that everything's doing exactly what you wanted it to do, that you have no risk on the trade. And this is where you have to remember that this is why you got into the market. You got into the market because the large crowd said we were going down. You got into the market because the large crowd said that there were no areas to react to. And you got into the market because you took the entry at the best of the best spot. You've already been paid and you've got no risk. Let the large chart do its thing, guys. Either get stopped out, break even, or let it hit the second target. And if it hits the second target, for the brand new user on the KISS plan, it is $200 in the distance, which means that that's a $300 trade with all the advantages, with very quick, pragmatic, if-then management. Your entries reduce opinions, reduce fear. Your management reduces opinions, reduce fear. Guys, $300 a day, if that's the best you can do, one winner in a high probability, 3 break-evens in a high probability. That's a $1,500 week, right? You math guys will recognize that as a $6,000 month or a $72,000 year. You don't have to make $2,000 a day to be stinking rich. You have to be able to take a high probability scenario and get paid consistently. Guys, $250 a day per contract. That's it. That's a $500 day, guys. That's a $2,500 week. That's a $10,000 month and $120,000 year on only $250 per contract. Let that sink in. Small goals yield big results. So rather than chasing all the trades, why not become an expert at the best trades? And then let that carry you. And this is the plan for consistency, guys. This isn't designed to be the end of the road if you don't want it to be. But I can tell you that there's a lot of people finding a lot of success with this KISS plan. And I can tell you as well that right around 30 days, there's a lot of people that start changing this plan up and watch their results diminish. They watch their results change. Man, I'm not as profitable as I used to be because I've added these 3 conditions. I'm not hitting the ball as often as I used to because now I'm changing things up from this very simple approach that's been proven to work, and I'm trying to deviate. I'm trying to be smarter than the system. So guys, if you find yourself inconsistent, if you find yourself not reaching your daily goals, if you find yourself thinking too much and second guessing yourself going into trades, this is an awesome opportunity for you to back it up just a little bit and refocus on simplicity. So this is my first hour, guys, every day. This is my first hour. We talk about advantages. We talk about disadvantages. We talk about momentum. We talk about paths that are broken, that aren't broken. And we talk about great entries, right? The area still hasn't broken, and look at how the market dances off that fib. It still might break. But are you fast enough of a chart reader to get in, to manage, to hope, to wish, to want? Crude oil went directly into support, and look at the bounce. Egads and little fishes. Look at how ugly your small chart is when you're caught in between fibs. There's no reason to get caught in that, guys. You don't have to. And then NASDAQ, look at all that momentum. Kind of crazy that the market keeps moving up with all that momentum, isn't it? If only there were a rule to help me identify it so that I could take advantage of it. So guys, that's the first hour. I dropped them in the room. I'm going to do it one more time. Both checklists. And I'm going to give you the KISS trading plan. And those are all 3 stacked one on top of the other in there. I'm also, you know what, that's all I'm going to give you for now. I'll give you some gifts later. Are there any questions before I take a little break? Hey, Gino, what do you think here, man? Little bit of overrun? All these divergences, 3 in the same place, higher. Can we call this a good bottom? What do you think, bud? Are you in here? Do you guys see how we overran a little bit? It's not a no triggers through termination, but your divergences on the smaller, faster chart give you confirmation that it may have just been a little overrun. This is your next step in good tops and bottoms, guys, is being able to recognize these things, being able to put it together to become a chart reader. So I'm going to take 5 minutes. Guys, if you have questions, post them in the room. If you have concerns, post them in the room. If you take trades, you have charts, post them in the room. If you did market replay last night and you want to share what you did yesterday, post it in the room. We'll talk about it. Every time I talk about charts in the room, guys, I don't grade you on whether or not it's a high probability trend trade, but I do backpedal to the advantages. I talk about momentum and a clear path in an entry area. I understand fully that everybody's going to trade differently, that there's 1,000 ways to use the software. If you are brand new and you're very hardcore, these are my rules, don't force that on somebody. Don't make your rules somebody else's rules. Maybe learn something from the other trades that are being posted, because typically they revolve around advantages. I'll talk about the momentum in your trade. I'll talk about the path, whether it's clear or not, and then we'll dissect your entry to see if there's a way to do it better. Just because I say this is a way that maybe you can do it better, and it doesn't mean that yours is wrong, because yours might be the comfortable way for you. But I use everybody's charts as a teaching tool for the entire room, which is why it's imperative that you tell me why you did what you did, why it's imperative to show me where you got in and tell me where you got out, because I'm going to use it as an opportunity to teach each and every. This is what we do here, guys. We're a community and we help one another. So do that part. And I will be back in about 5 minutes or so. And when I come back, I'm going to start looking at charts. And when I look at charts, we're going to talk about advantages. And we're going to look at the live market. Small triggers through, large triggers not. This is a 50-50, guys. This is also a 50-50 since the path isn't clear. One loss of momentum, two losses of momentum. It keeps getting uglier on the momentum side. This becomes a very much lower probability. Support still hasn't broken, nor has support broken here. Large triggers are up, small triggers are down, background is red, large triggers are green. Guys, this is the look where people try to predict. I think it's going down because it's red. No, I think it's going up because of support. The only thing we can be sure of is eventually it's going to hit that 1103 timestamp. We just don't know where it's going to be when it gets there. So I'll be back in 5, guys. Go stretch your legs, do a little yoga, scratch the dog behind the ears, get a drink of water. When I come back, we'll get into the second part of the classroom. Okie dokie. Let's get back at it, guys. Let's take the drawing tools off. So I'm going to ask real quick. Give me a why in the room if you understand why there's nothing to do in crude oil right now for the average high probability trend trade user. Can you see how we don't have odds favorable momentum? Is it clear that the path isn't clear? Guys, this is so important. This is one of those times where, especially if you haven't had a trade in the last 20 or 30 minutes, this is where you're going to try to predict, guys. This is such a key look, and it's not even a look with anything to do. This is the NASDAQ. You have odds favorable momentum. That was a medium probability trade. That wasn't a very good look. But now, more and more, this area looks like it has the potential to break. The large triggers are screaming up. The momentum is outstanding. Everything's railing to the top side. And there may be an opportunity for someone in there. And then, guys, S&P support never gave it up, did they? Once again, guys, it's imperative that you understand that even with odds favorable momentum, it's difficult when you reach a line and the triggers don't break. I was talking to somebody yesterday, I think in here, how sometimes there may be an opportunity with this much momentum for a little retest, right? Because this is an absolute freight train. So without divergence and a tiny little window of opportunity, some people will take a shot to get back and retest the area and manage aggressively, guys. It's just a chart read. It's something that you can do a little later in life as you begin to recognize patterns over and over. So I'm going to scroll to the top of the chat box, and I think there's maybe 4 pictures to look at. I'm going to take a look at them. We're going to talk about them. If you have questions about anything that you're seeing, let me know. Man, there's just not a lot of pictures going on today. Let's see. All right, Paul, you got us started. Let's see what you got, my friend. Paul has a termination, and then it goes down to support, and then it goes back to the termination, gives a lower divergence, and Paul has one of those 50-50 trades. He has odds favorable momentum. His large triggers are almost through, and he's coming from a great top, and he has no divergence. And look at his entry. Absolutely beautiful. Takes profits on the way down, and he is almost break even in his trade. Paul, beautiful looking trade. I sure hope that worked out for you. I don't know if there's a follow-up to it, but that was a great look. And then Chef, you took both these trades on momentum alone. Rules definitely not met. And this is pretty good, Chef, because we just talked about it, right? With that much momentum and no divergence, here's your momentum style. And this just didn't have any room. And man, I like that you got paid here. I really do. But this one just doesn't have any room for me. You're in at 49.50 and your fib's at 49.75. You made 3 ticks on 4 contracts, which means you made 2 ticks on 4 contracts after commissions. I'm a big fan. If you're going to have momentum alone, make sure that you've got room. And then with no divergence on the pullback, beautiful entry and back out, a little more room to manage coming through there. And you said you like to use Nexgen along with your other platform where you read charts. You're still stuck on looking at candles on a 5-minute chart. This gave you a bit more confidence to get in the trade. You could have held a bit longer, but because rules were not met, you scalped and took your earnings. I love it. Nice job. Momentum leads the way, guys. Momentum. And that's that retest, right? This one, I get it. I understand lots of momentum. There's just no room to go. This one gives you room, a little bit of wiggle room to manage. Nice job, Chef. And then hypoxic. And guys, sometimes I miss a picture. If I ever miss a picture, let me know. I never meant to. Oh, thanks, Ron. All right. Thought this was an adequate top. Maybe not. And this is hypoxic, yes? Nope. Hypoxic, I got you right now. This is yours, right? Cool. So the first thing is this is your smaller chart, right? This is your entry chart. This is your refinement chart. Good tops and bottoms come from the large chart. So that's going to be our first lesson. Large charts define areas, and it's that termination that creates a full reversal that gives us a good top or bottom. Does that make sense? I don't anywhere in my lingo have adequate top. It is the same fib. Did it reach it? Would be the next question then. And this is just, I'm going for lessons for the whole class here. Terminations happen on the large chart. Oh, I'm sorry, Cab. Take care, bud. So for me, and call me crazy, if I don't reach the fib, and it's one thing if it's a tick, but you're probably 2 or 3 ticks off of it, not a good top for me. Not 3 divergences to say that it was stopping short. It's just, it's a good look, right? The market reverses, everything is down, the momentum is its absolute strongest. And then what happens is you get that 50-50 look, not from a good top. Are you with me so far, Hypoxic? Because it didn't reach the fib. Okay, cool. So then we come into 50-50 range. Smalls are through, large are not. Man, the momentum is beautiful. I mean, that is everything that I hoped for in momentum. And let me blow this up a little bit. So we know that we have a medium probability trade. Got a partial fill initially, complete fill on the way up. Should you have bailed out seeing the divergence at 68.90? Well, Hypoxic, this is where we get into that sticky situation where I can't really tell you whether or not you should have, right? What I can tell you, and let's go back to 100% here, is that when I have a bad top and then I have a 50-50 and divergence prints, if I go back to the KISS plan, if I go back to the highest chance of success, there's some pretty real criteria on here for taking those medium probability trades. You killed it on the odds favorable momentum. You killed it on the small outside of the large. You had momentum on both charts. You had no divergence on the 5-1 on your first entry, right? It wasn't a good top, but you had 3 out of 4, and it looked beautiful, and you took the perfect entry. Notice that it says no divergence on the 5-1, that it says divergence, no trade. This is a pretty big indication of how divergence can affect one of these areas. And then you'll see in the management where it also says if divergence prints exit trade. So there's the third mention of divergence. You absolutely rock star your entry. And then you're in, let me see your price. Let me go to this one real quick and just make it bigger. Whoops. So you're in at 05, which means at 95, you're up $100 right at the trouble area, right? You don't know if the area is going to break. And right here at 95, you can collect $100. And then when divergence prints, you can say, man, not only do I not have a clear path, now I have loss of momentum. Instead of entering, you could have been out for a couple ticks or maybe a break even on that second contract. And then the second half of the 50-50, I want you to see something. It's not one area that you're hoping breaks. You're literally hoping momentum pushes through 1, 2, 3 areas and not from a good top. Does that make sense? This was such a good picture. Your entry is outstanding. And I think that this goes back to remembering what kind of trade that you're in. And this is one of the things, is entries become the first step, right? And you killed it. Management's the part that takes a little work. Management's the one that takes some repetition. You've got to see a lot of different scenarios to have an idea of how you should manage a trade. And then let me just make this a little smaller. Notice that the management for the absolute best of the best trade is different than the management for the medium probability trade. Because the medium probability trade gets managed a little more aggressively. And I think that was the one thing that didn't happen on yours. Because when you know what you're up against, you get the mindset, right? That's why we speak in advantages. And now I'm speaking to everybody, not just Hypoxic here. When you know that your path isn't clear, it's okay to not hold for the big move. It's okay to take quick profits. And the management process on the 50-50 says identify your trouble spot. That's the area that's not broken. And that's a great spot to take profits, right? Even if it's $70, $80, that's a great spot to take profits to get to a zero loss level. And then when divergence prints out, just ditch it. I love $100 trades. I'll take them all day long. I have absolutely zero qualms about taking $100 on a trade. Did it right here. I identified a trouble spot without the strongest triggers. Quick $100. It adds up. I promise it adds up, guys. Paul does one of the best jobs of that. Paul is such a big fan. I'm going to get paid. I'm going to make sure there's money in the bank, and then I'm going to protect my position. I think it's a great trade, Hypoxic. I think there was an opportunity in management. But that was solid, dude. Your entry, I could teach a class with. And then D-Rock, everything says down. Everything is strong. The path is clear. Look at this sniper entry. Money, money. Absolutely beautiful, D-Rock. Does anybody not see? And let's do this because I love 3 charts, right? D-Rock, I'm just not as smart as you. So I'm going to look at it on 2. Odds favorable. Didn't reach the fib. Area of resistance inside of favorable large triggers. And guys, the best thing that D-Rock put on this was this right here. Well, that didn't grow the way I wanted it to. That was going to be a neat little trick that didn't work. Rules still valid with 2 divergences. Rules still valid with 2 divergences. Because, guys, how many divergences does it take to end a trend on the small chart? How many divergences does it take to constitute a termination condition? Always 3. So knowing what you're in, knowing what kind of trade you're in, gives you the ability to determine whether or not that's scary or if you're just going to ignore it and plow right through it. And sure enough, divergence for the win. David, here's the cool thing is you don't need the other chart. You don't need the 3rd chart and what it shows. It's a market flow chart. If you are comfortable and consistent with 2 charts, for now, don't worry about it, right? Because for now, you don't need it for high probability trend trades. You don't even need it for 50-50 trades. This chart did nothing for D-Rock's trade. It just happens to be where he takes pictures, right? But he could have showed us very easily just the 2 charts, and it's the perfect trade. Does that make sense, David? And then for you guys that are hell-bent on becoming market flow traders, and you're like, I have to have that 3rd chart because all the cool kids have it. I'm going to show you something. This is a market flow chart. Well, it was a market flow chart until I closed it out. Here we go. We don't have a lot of pictures, guys, so we might as well just have some fun. Let's see if I can get my 2 triggers on here. I think my template's broken. I'm going to have my brother build me a new one. So I'm going to try and just get trigger lines on there. So you guys that are like, man, I want to be, that didn't work. Okay. So you guys are like, I want a market flow chart. I've got to have a market flow chart. All the cool kids have a market flow chart. Why don't I get a market flow chart? I want to keep it pretty simple here. And this is the S&P. So David, if you decide that you're going to go, market flow is nothing more than a confirmation chart. That's all it is. Market flow is an opportunity for you to confirm a couple things. The first thing that you can confirm, the easiest way to use the chart, those are strong triggers. You've confirmed the momentum. Those are not. The momentum is waning. Those are stronger. Those are not. They don't match. They got above. And what you're seeing is that consolidation in there. So guys, market flow, if you want to add market flow, outstanding. Use it to confirm momentum first. That's it. And don't get caught up in the river buoys like Ron calls them. Just focus on the trigger lines. It'll give you a lot in terms of information for the confirmation process. So David, let's go back because we got nothing but time, right? What do the trigger lines say on his, I know, too many mind, David, but what do the trigger lines say? Guys, help me out. Small separated from the larger wide, they're angled in the direction of the trend. It's odds favorable, right? It's strong. So D-Rock just used it. He said, that's strong. This is strong. That's strong. Holy shit, I got to go short. Everything is strong in the direction of the trend. Pardon my French, you guys with delicate ears. He didn't need it, but it's just kind of one more warm fuzzy. Does that make sense, David? And when it was consolidating, it was flat, and then eventually it broke out and gave momentum. So, guys, I say it every day, and I mean it from the bottom of my heart. There's 1,000 ways to use the software. There's 1,000 ways to recognize advantages. There's 1,000 ways to get the most out of each and every trade. But if you don't understand the basics first, if you don't understand the basic chart reading first, it becomes too much noise, right? And then, Paul, you say most days you insist on the best entry. Lesson learned yet again. Guys, one of my things, I think, is the ability to recognize patterns. I'm sorry, Jose. I'll get right back to it. Thank you for telling me. Wasn't intentional, I promise. So, Paul, I hope you're in here for the lesson. I'll go find it. Oh, I think you got us started, didn't you? I'm sorry. The smalls are outside, but there's not a huge separation, which means that you have momentum, but it's not odds favorable momentum, right? It's not the best of the best. It's not that separation between the two. And then when you come to your smaller chart, you have another loss of momentum. And Paul knows this lesson, but sometimes we forget it in the heat of battle, right? So Paul knows that without a market that's absolutely screaming, and with a loss of momentum here, his window of opportunity, it's likely to go higher. Loss of momentum, little further pushback, right? Not the best momentum, loss of momentum, smalls inside the large, it's likely to push a little higher. Does everybody get that lesson? Why do we get in at the bottom of the window, guys? Why do we get in at that spot closest to price? We do it because there's odds favorable momentum on the large chart, because in a perfect world, we've got the best trigger look, right? Smalls outside, get in at the bottom. As soon as you start losing it a little bit, it may push higher. And then Paul took a stop. Paul, you got stopped out right at resistance inside a favorable large trigger. So there's a stop placement lesson in there. You got to be willing to stay inside of that window of opportunity, guys. Everything is still met here. And then, David, just to compound, when you have a trade where it isn't perfect, sometimes you can use market flow as a little confirmation piece over here to help you get in. It's a good look. It just ran a little higher because there wasn't momentum. All right, Jose. Sorry about that, bro. The fib reached. You're coming from a good bottom, and you have strong triggers. I like the way you lay this out. Jose says that from a termination that creates a full reversal with odds favorable momentum, I'm just stacking advantages over here. And there's a fib in the way. Notice that there's no divergence on the pullback. So Jose says, little challenge here. I'm not going to let there be a challenge here. He has odds favorable momentum, tiny little window of opportunity. Jose, beautiful entry. Quick profits, taking profits again, not willing to give it up into that area that you know can be problematic. And then when it pulls back, nothing changes. You've got support everywhere. So you're like, you know what? Let's give it another shot with all that momentum. And you take your target, and that one breaks, and you get out at the one-to-ones. Jose, I love everything about this trading. This is outstanding chart reading. Was there ever a doubt in your mind that 69.18 could be problematic? Was there ever a doubt in your mind that 69.18 could end the trend? I hope not. Probably not, because you managed it. And I'm not sure where your down bar printed. I guess on market flow, that's pre-print, and that's on the way up. I'm not sure how you got stopped out before it printed. Either way, though, beautiful. $200 here. Another $100 here, and that one goes for the full $200. $400 in a couple minutes. Trading with momentum, trading with direction. Everything is green on the way up. And then there's that confirmation of momentum on the 8 range. Jose, beautiful trade, my friend. That's a little experience coming in, understanding the advantages, the disadvantages. Oh, Hypoxic, take care. Did I miss any of yours, or did we get them all? And guys, if you ever have to leave before I review your charts, if you put one in there and I miss it, just tell me. I'll review it in the moment. I'll go find it. Okay, cool, man. Enjoy your afternoon. Jose, $400 isn't a bad day. If you went and hunted grizzly bears right now, and that's the best you could do every day, right? That's an $8,000 month. That's a $96,000 year, guys. Embrace the idea that it's okay to not make $10,000 every day, right? Embrace the idea that you don't have to hit a home run every time. There was a great video. My brother sent me this over the weekend. I've shared it already. And this talks about the neuroscience and the dopamine kick that comes from those big hits. And it's almost like a heroin user where you have to have more, you have to have more. Great watch for after class if you want. All right, Joel. Odds favorable momentum, no clear path, 50-50, medium probability trend trade. You couldn't have done that better. That 100% lines up what's happening on the large chart. Split triggers. Your synthetics are way up here and your large are way down here. So your window of opportunity goes from 1-to-1s all the way down here. And then this divergence is on the pushing side, going up. This divergence is not on against you in the trade. I hope that makes sense. That's 10.07. Joel, one thing that happened here is your most current timestamp is 10.07 over here. So here's your medium probability, and there's nothing, I can't see the entry. You're looking at the potential long right here. Off the termination when triggers roll. That's not a high probability trend trade. That's actually, I love that look. But see how this is off screen. Awesome. Great job. You chose not to take it. Beautiful job, Joel. Guys, the rules aren't hard. The looks aren't hard. Defining direction is actually really easy, isn't it? It's either up or down. You don't even have left or right options. It's either green or red. Let it be a flow chart. If Watch this. Let's turn it into a picture real quick. If I have a green background, then I need strong triggers to the upside. If I have a red background, then I need strong triggers to the downside, right? From 1 to 2. If I have strong triggers to the upside, I need a clear path. If I don't have a clear path, go back. If I have a clear path, then I need an area inside of favorable large triggers, guys. This is your checklist kind of defined in one picture. This is reminding you that you're going from left to right, that you're starting basic and working your way to an entry. And the same should be true with your education. If you are super comfortable with colors, you're only going to spend a couple seconds on one, right? And if you're super comfortable with the idea that there has to be space between the two, this is going to take you no time at all. But then you get into the one that's got a little more to it, where you have to do a little bit of comparison, a little bit of did price reach it? Are my triggers through it? Guys, this one may stick you for a week or two. You may need to go back and take 50 pictures. And I'm going to tell you right now, guys, my favorite pictures are when you guys open up a chart and do this. Take a picture, get your call out, misspell termination because really we don't count for spelling. Does everybody see that that's a termination? And then here's the key to understanding. Here's the key to understanding why. Type it out. Price reach resistance. No triggers through. Guys, these are the pictures that I want to see in the room. This is the picture that I want you to take and I want you to post. And I want you to seek a little confirmation as you work through termination conditions. Because how many times would you have to take this picture before the recipe sticks? What do you think, guys? How many times? If you write termination, if you write the recipe 20 times, do you think when price reaches an area, you're going to automatically go through it? Or are you going to guess or hope or wish or pray, right? And then do the same thing on a 50-50. Let's find a picture. Take the same picture and do that. And call it a 50-50. And then type out what that means. Potential to break with momentum, but not broken. And then elaborate. Rule 2 not met. Guys, we're talking about study habits right now. How do I get good at this? How do I get great at termination conditions? I do the work. And if I don't do the work, how do I expect to get great at it? And then once you're great at it, once you show me those pictures, once you get confirmation that, hell yeah, you're a rock star, let's focus on entries. So you're going to scroll back on your chart, guys. You're going to go back 10 days. And you may fudge it up, right? But you're going to start circling tails. And you're going to see whether or not it's inside of favorable large triggers. And you're going to take 50 of these pictures and you're going to drop every one of them into the classroom. Every one of them into the classroom. It's not a trade. You're studying. And you're going to say, hey, Mark, did I do it right? Is that the window of opportunity? Hey, Mark, there's a short one, right? Area inside. I'm writing out the recipe because I want to be able to do this. That was a long, right? Window of opportunity, highest point of support. And that was right, even though it went up, wasn't it? Reversal bar, window. Oh, man, Mark, that one didn't work. But I got the entry right, didn't I? Guys, I'm telling you right now, if you put that much into your trading, you're going to get to where you want to be. If you have a spreadsheet, sorry, I'm going preachy right now because there's not a lot to do. And I know that I have people that aren't hitting their goals every day. If your favorite looks is empty and there's nothing going on, if your copy of tracking is empty and there's nothing going on, if I can't go through the history of this classroom and see 50 pictures from you, and you're wondering why the hell you're not finding success, guys, that's it. That's why. All right, Jim, made a short trade in oil. Market moved super fast. You got stopped out, so you traded into news. You knew that you traded in the news. So you got stopped out the same place you got in? Hold on. You've got two pictures. Jim, are your computer screens on the same monitor? Or are your charts on the same monitor? And this is just me trying to make my life easy. There is your first picture. That's your large chart. So let me show you a trick real quick. It's okay. I know what you're doing, and I'll show you why it's doing what you're doing. Are you using Snagit or are you using Capture? I'll show you guys a trick for getting the perfect picture. And this will just make it easier to study, too. It makes it easier to read it. Guys, if you're using Capture or Snagit, click that big red button. You can't hear me? Guys, can anyone hear me or is it just cream white? Give me a Y if you can hear me, please. Thank you. Oops. Is it live, Jose? Or is it sim? And remember that you can go to Apex if you're on Apex and you can log in. Stop it, I don't even need that. And you can go to flatten accounts. And if you're in a position, you can flatten sim or live. You can right click and cancel all orders. See if that works. Did you try cancel all orders? Seven or eight. Is it Apex? I don't know anything about Profit Trader. Do they have a number that you can call to cancel? Is there a side something where you can cancel outside of NinjaTrader 8? I know Apex, you can flatten everything outside. I don't know about Profit Trader. You can go to your control station in 8, and I believe under orders, there's a cancel all orders. Just shut it. Hold on. I guess he can't hear me, huh? So Jose, if it's stuck there, usually there's a safeguard somewhere. In NinjaTrader 8, canceling orders. Let me see if I can open up my NinjaTrader 8 real quick and see if I can find it for you. Do they have a number? Do they have a profit trader trade desk you can call? Okay. Mine's opening up right now. Give me just 1 second. I'll see if I can find it. So there's cancel orders off of the whatchamacallit, off of the chart trader. And then if I go to orders, tools, no, options, no, right click, cancel all orders. So I right click in the order section, cancel all orders, see if that works. Hopefully that does for you. And if not, I would drop a quick message in the traders chat as well. There's people that are better at it than me. I hope that works for you. All right, and then Jim, let's get back to yours, brother. So what I'm doing here is I'm taking your large chart and your small chart, and I'm going to put them together. Oh, that's where we were going with that. Guys, if you click capture and you hover over just one chart, it's only going to take pictures of one chart. So what you have to do is left click your mouse in the upper left hand corner and drag it all the way down to the bottom right, and then release the mouse. And then Jim, that'll make it so that you can get both charts into the picture. But I got you on this one. And trading into news is always hard, but let's look at what you had. You did have a good top. I like it. You had crazy good momentum, odds favorable, love it. It's a 50-50 trade, Jim. If you got in at the mid-band inside of favorable large triggers, your stop belongs, it looks like it's over here to the side, right about there, where the market shouldn't go. Sound about right? Here's your challenge. Is you already had two divergences against the trade. So not only did you not have a clear path, you were one divergence away from a full-blown termination condition. And these divergences on a 50-50, Jim, can create challenges. And for me and for most new users, one divergence is problematic. Two divergences is usually a deal breaker on the 50-50. No matter how much you wish, hope, want, it just doesn't tend to work out that well with two divergences. Does that make sense? Beautiful entry. Beautiful entry. But these were working against you. And that's hard when you see it and it looks so good and you're like, I want it. To be okay with the idea that it's better to just wait. That it's better to just kind of sit on your hands and just don't do it. Because remember, when you speak in advantages, you've already given away the clear path. And now you're sacrificing momentum as well. And if you just go by a numbers game, you are 60% gone of advantages. And now you're just relying on a cute little midband inside of triggers to push the whole market down and fight these other two gone. So I think the look was pretty good right until it started throwing divergences at you. Thank you for posting. And then Joel, termination, full reversal, awesome momentum, beautiful entry, unbelievable exit. Rules met, relax. Joel, nicely done. Anyone else catch that one? I think that was crude oil. There should be more pictures than just Joel's in there. Joel, that's outstanding. And then that's what we call the apology trade, Jim. When that 50-50 messes you up and it goes the other direction, that's the market going, dude, sorry, Jim. Let me give you an opportunity to get paid on the way up here. And then, Jim, let me double check your charts. Are you running synthetics on your charts, Jim? Are you pulling the areas from over here? You're not. So you're only, well, yeah, you are. You do have synthetics. Just making sure. It is 50-50. Cool. Mine looks a little different. That's NASDAQ. Support worked. Right up to resistance again. Have we defined the range? I feel like we have. Guys, that's all the S&P has done today. That's it. Do you think they're waiting for FOMC? D-Rock NinjaTrader 8 will tell you automatically. It'll give you an update. It gives you a big pop out. But you can do any CME calendar. So like if you go here and you put CME rollover dates. So on NinjaTrader 7, crude oil changes on the 15th of every month. Crude oil is monthly. And then the equity and like the S&P, the NASDAQ, stuff like that, roll quarterly. So 2023. I don't know. I just have trouble reading this one. 12/15 is the expiration for these. So it's quarterly for like NASDAQ, for the S&P. It is monthly for crude oil on the 15th of every month. But if he's with NinjaTrader, there should be they used to have a calendar that showed you and it looks like it went away. There is an issue. Sorry, Jose. I wonder why they changed it. I'm not sure. D-Rock. I mean, I guess you could take the market. Well, now I'm just curious, right? You could take the market that you're trading. So if it's gold, when does gold futures roll? And I guess that's the easiest way to do it, right? Gold futures calendar, CME group. Now I'm just on a mission. So for example, there's your first trade, last trade for gold, settlement date, stuff like that. So you can go through and you can find it, CME calendar, and then it'll let you pick what you're looking for. Yep, I knew that there was something there. Guys, S&P's done a whole lot of nothing. I'm going to take a break here in just a minute, but I'm going to remind you right now why the S&P may be doing a whole lot of nothing. At 2 p.m., guys, there is so much news that's going to affect this market probably. And remember when I said they're going to jockey for position? They're going to start looking to get into place to take these big contracts, to take these moves to try and react emotionally. It looks like we're already seeing it in the S&P. They're caught between resistance and support and resistance. And it may break out, it may move a little bit, but there's some consolidation happening. Crude oil's moving pretty smooth, given opportunities in between the key areas. And then NASDAQ appears to be caught in a little bit of a range as well. 50-50 with divergence didn't work once again. Setting up for 2 p.m. then. Guys, this is one of those days where when I'm done in this classroom, I probably won't trade. And I'm not saying that you can't. And there's usually some really great moves after FOMC, assuming the market you're trading decides to slow down. I've seen it on FOMC days stay too busy to trade, too fast to trade for an hour after the announcements. And it's kind of cool because if you go back and you look at them after, when everything is kind of done, you'd be like, holy crap, all the patterns worked. And it's amazing. The patterns work even in the chaos. It's just too fast to work. And then Gino, here's one of those instances where it was a 50-50, not only on the divergence high, but also at resistance. And that divergence, that second divergence, that lower divergence, gives you an indication that at least for the moment, it was a little bit of overrun. The large triggers haven't rolled, so it can't be a good top no matter what, right? Because there's not a full reversal. Those large triggers are still very much up. So something to think about. Guys, I'm going to go stretch my legs again. We're through all the pictures. The market's not giving tons of looks right now. So when I come back, if there's a subject that you want to cover, let's talk about it. See you guys in 5 or so. right, here we go. Last hour, guys. D-Rock almost had an HVA trade. And D-Rock, I was almost good looking. So close. Let's see what happened. Let's see how we did with the rules here. Good bottom. I like it. Triggers roll. I like it. So let me make this a little bigger. So D-Rock, why is this? And let me just make sure. Why is this odds favorable from a termination with a clear path, pull back to a mid band inside of favorable large triggers, not a trend trade? Why is it an HVA trade? Because there was a green line? Because your termination condition was down here. This was your HVA. So that is your high volume area trade. And this is just a great lesson. Thank you for posting this. Your HVA trades, D-Rock, are going to come from, they're going to be close to the termination condition where they're happening. See how the HVA line is so close to where the market reverses? See how the HVA line is so close to where the market reverses? The HVA is formed when this breakout bar, this white bar, follows a reversal bar. And then the high volume area of that bar, that's where the buyers took off. That's where the sellers took off. And that's the line that they create that says, if the opposing force pushes, this is where we're going to unload on you. Does that make sense? So what happened here is you had a little pullback right to the triggers rolling, right to support, right to support. And then this, which is really kind of a termination going up, there's your breakout bar, there's your HVA line, and there it is right there. And it's behaving and it's coming from this area. Does that make sense? It's essentially a trend trade, and it's a trend trade supported by a high volume area line. So what it does is, you said that these weren't quite turned all the way, right? So you had limit order on the HVA level and it missed you by a tick. Gotcha. So here's the second thing to think about. I love the trade. I love that you were looking for the long. And off that area of support, I would say, yeah, that probably does qualify. Tick above, right? Tick above, 2 ticks above. Just like a trend trade. The HVA line is awesome, but it's not a guarantee. I'm always, if I were going to go long at this HVA line, if my rules were met, I would be in right there at 35 rather than waiting for 33. If everything's set up. Does that make sense? But this really is, yeah, kind of more. So when everything is up, and just check it out, you're green, your triggers are strong, they're above support, area inside. This HVA line just adds warm fuzzies to it. But that qualifies as a trend trade because this pullback right here is right here, isn't it? Let me double check the timestamp. Not the timestamp, but the price. 69.34, 69.34. So you're very much odds favorable right there, right? Yeah. So that's a trend trade, but it's a trend trade that's supported by an HVA line, which just adds a little more to it. But D-Rock, this is the very real phenomenon. You were so caught up on an HVA trade that you missed the trend trade. Does that make sense? And I'm not saying that it's a bad thing. It's just as you add trades, you've got to be able to piece them all together. And I found that a lot of people do that. And I was playing with somebody once. I told her that she bastardized the rules. She started creating these crazy little love childs where she would take some of the rules from one trade and then some of the rules from another trade and kind of piece them together. But that's odds favorable, clear path, and a tail. That's beautiful. I love everything about that. Should have been a tick or two above. That's all it was. It's a great read, D-Rock. I'm not knocking the read at all. You had everything lined up in your sights, exactly what you needed to see. You had every advantage, and you just were a tick off. I think so. Directly into support, right? Termination to support, pulls back, continues down into support. And then S&P is still stuck like Chuck. Crude oil is trying to figure it out. Let me go to my arsenal of pictures. Let's do the too many mind one. We haven't done this in a while. This is for you guys that want to catch every move instead of the best moves. Just an idea of what you have to think about, right? If you're thinking about a high probability trend trade, that's what you're looking for. That's your focus. That's 3 rules, 2 charts. Collectively, 5 things to think about. If you add the 50-50 trade, which is 4 rules on 3 charts, well, that's 7 things to think about, right? So with both of those, that's 12 things to think about. That's only on one market. Add 2 markets, that's 24 things to think about. And every time you get into a trade, you have to start processing this stuff. If you add a momentum trade, that's a couple charts, 4 rules, 18 things, 3 markets, 54 different scenarios that you have to weigh out in order to make a good decision. And it can be done. And then you start adding an HVA trade, and there's even more to think about. It can be done. The easiest way to do it, I'm going to share a secret with you guys, is become so good at this that you don't have to think about it anymore, that it just happens naturally. And then add in this. And that becomes so easy that you never even have to think about it. Like, you're not weighing out, is that a clear path? Is that odds favorable? Is this my best area? It just happens. It just happens naturally. And then you start adding the next one, right? And go through that process of be outstanding at one thing before you try to add something to the mix. It makes it easier. It really, really does. I don't know. I know we've got motorcycle people in here. There was a time in my life where I road raced motorcycles. And there was a gentleman named Keith Code, and he had the California Superbike School. And what he did is he trained people, some really, really impressive people. But he trained them to be road racers, to race motorcycles. And one of the things in his book is he talked about in every race. So in this case, we're going to say in every trade, you have $10 worth of attention, right? And that's all you have. That's all you can spend. So guys, if you're brand new and you're looking at odds favorable momentum, trying to figure it out, that's probably $2 worth of your attention, right? And you spent $1 of it just looking at it, making sure that you're going the right way. When you're trying to decide whether or not it's a termination condition or not, I'd say that's at least, $4 worth. And you're already 7 in the hole. As you're trying to figure out, you've only got $3 to spend on what's really the most mechanically advanced part of the trade. And then you study for a little while, and you don't even have to think about it, the direction. It becomes automatic. And odds favorable momentum, you still double check. You think about it. Termination conditions, you run through that recipe instantly. And you're like, it doesn't take me any time at all. And now you're only $2 in the hole. And you have $8 to make sure that your entries are good. And the better you get with entries, you spend less and you spend less until you're down to maybe $1 of each. And guys, and then you start the process over. Now you have 7 for the next trade. I'm not great with analogies, but does that make sense? Get to the point to where there isn't a mental cost to find the trade that you're searching for before you try to add more trades. And what you'll find is it's easier to not confuse the two. And D-Rock, I don't think you're doing it to that extreme, but you just kind of led me into a segue, and there's not a lot of posts, so there we go. Jeremy, termination creates a reversal. Reversal gives you odds favorable. Odds favorable pushes to a fib. The fib is very much a termination condition. I don't deny that at all. You're fighting everything that says down because of small triggers on an 8 range. I'm rooting for you, brother. Caught in the range. No triggers below the fib. It's great looking termination without a doubt. So you're expecting these blue lines to hold? All right. I like it. Not mad at it. And it worked, didn't it? There you go. Nice job. Is it a high probability trend trade? No. Jeremy, how many pictures of that setup do you think you took before you felt comfortable fighting those large short triggers? At least 200. You know I love the trade, right? And I agree with the trade 100%. I like the way you took it. If you're brand new, that's a lot to dissect. That's a lot of fear to overcome. Nice job, Jeremy. And then the second trade, maybe your add-on, even without a range chart. D-Rock, there's your momentum off of termination. Termination, divergence print, smaller up, break the 1-to-ones, pull back to it. If it's really going to continue up to that fib, that's where it's most likely to do it. Let it pull back. You can even let it break back above. And then you know exactly where the trouble is, right? Just down the line, something to think about. There are no bad trades. There's trades with less advantages. Actually, that's not true. I would say trades that don't have a statistical advantage, I don't care for so much. I like winning more than I lose. Price reaches support, no triggers break. There's 2 divergences. We'll see if Jeremy goes long there. NASDAQ, support to the tick, and it creates a bounce. Let's do something fun here on this NASDAQ chart. Just for grins. Because really, what else are we going to do? Odds favorable for the win all the way down. This is a great way to trust usually. It certainly creates more of an advantage. I don't really have a momentum trade rule. D-Rock, to be honest with you, I tend to not take them. But I do like smalls above the large. Guys, this is just a lesson in momentum. How's that for momentum for the win? All the way down. We knew there were a ton of areas in there. Once again, do you guys see how momentum pushes a market? What a great way to develop trust. What a great way to develop trust in the overall move. And then once you start developing that trust, you start learning those patterns that are easy. Well, then you do what my buddy Jeremy did, and you start going, well, terminations are a very real thing. I wonder if there's a pattern. I wonder if there's a pattern that helps me take advantage of these amazing Fibonacci areas, whether it's pulling back to them or whether it's stopping and seeing a slowdown. And then on the momentum, smalls cross each other. I don't know what that means, Jeremy. Smalls cross each other. Not 100% sure what you meant with that. Where I was going with it is if those small triggers begin to get to the other side of the large, it definitely increases an advantage because these synthetics can act as a bounce point, and then when they get above and it's smooth sailing, it just tends to be easier. Jeremy, I'm not 100% good with your plan, to be honest with you. Not like I don't like it, I just don't understand it well enough to speak intelligently on it. That was not an anti-Jeremy's plan statement. That was just, I'm ignorant. I don't understand it well enough. I couldn't teach it based off of the picture. But I know that you probably could if I gave you the microphone. That's all that's important, guys, is you should be able to teach your plan. Oh, so the smalls cross over. So they roll and go from red to green. I got you. You know what's funny? And I'm about as artsy-fartsy as they come. I've never, ever considered that a crisscross. I've probably never even thought about it. I always said, they pinch and then they spread again when they change color. I've never, ever in my head seen that as a crisscross. But it is. I used to call them the triggers roll. That's kind of cool. Now I'm always going to see them as a crisscross. Thanks for that. We just pinch and roll is what we used to say, right? They pinch and then they roll the other direction. They pinch and then they roll the other direction. Now they crisscross applesauce. I like it. All right, guys, here's where I ramble since there's no questions. To minimize your learning curve, post pictures of your trades in class. This is where I start losing people. You're going to see the audience drop. To minimize your learning curve, guys, post your pictures in class. Man, I looked for the killer, Jose. I actually looked for it last weekend. And I think I had the name wrong because it didn't look like anything. It was Netflix, right? I tried the killer and I tried killer and it kept giving me a couple different things. What's it about? So maybe I just saw it. Michael Fassbender. Okay, I'm taking notes right now. Because I looked for it. I had one of those days where I was on the couch and there was nothing to do. It's about a killer. That makes sense. But I kept thinking that I had the wrong movie. So now I've got his name. So now I'll find it. You know what's cool is the house that we rented here in Dallas, the owners left super high-end, state-of-the-art projector with like a 15-foot diameter projection screen up there. And it is like crazy HD, even 3D if you want it. So I'll watch it on the big screen and give myself nightmares. Should be fun. Guys, to minimize your learning curve, post your pictures. Every picture, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How you know the difference? To be sure, you need feedback, and I'm here to help, guys. If you place a trade on the simulator, you participate in class, there's no risk of capital loss. You need someone to tell you what you did right or wrong, even when it stings a little bit. This is part of the educational magic that Nexgen offers, guys. It really is. This is what I love to do. I love to give feedback, and I've never once sat down on the couch with my wife at the end of the day and thought, oh gosh, Jose is such a yahoo. You should see the trades he's taken. Because they're your trades, guys. It's just a learning process. Use this outline for education. I wonder what that looks like. Let's see. Oh, look at that. Learn the rules, simulate, simplify. That dang Joel. Yeah, she's mad at you. Not really. Where'd it go? Fill the checklist, guys. Study historical setups. Create at least 15 images a day. Present them in class. Annotated. Copy paste your checklist. How to annotate your charts for the most feedback. Write your rules. Show me what you got. Talk about what you did. Create a database of rules met entries for studies. There's that darn spreadsheet again. Create a database so that the looks become easy. Define your management plan. There's that mechanical management plan. And guys, here's the part as you guys go into Top Step, as you go into Profit Taker, as you go into Apex. Accept that you may be less capable of a trader than you initially believed your first time out. Everybody feels entitled to win, guys. Everybody puckers when they go live for the first time. Only the people that trade well are going to win. That's just how it works. Before risking your capital, test your trading plan using a prop firm. Guys, if you feel great about what you're doing, if you're winning more than you're losing, if you're like, man, it's time to go live, go drop $50 on Apex, right? Test it there instead of on $5,000 of your own money. The days of having to get blown out for an education process are gone. The best part is you keep the first 25 grand that you make with them 90% after. So things to think about, guys. That's a pretty good path to get to where you want to be. S&P still has not broken out of a range. Crude oil bounced right off of freaking support, didn't they? So did the NASDAQ. Guys, it's termination conditions for the win. And rule number 2 to define the range-bound market. What else can we talk about? How about this? What to expect. I think everybody in here has been with me for a while. You sign up for your demo. You talk to your salesman and you're like, man, this looks like fun. This is going to be awesome. I'm going to be like Michael Douglas in Wall Street. And then you realize that it's going to take a little work, guys. I teach you how to do the work. I try to be a good coach and a good tutor for you as you do the work. And most people are like, oh, this is hard. Some of you drop out. Some of you stick with me. And then you have no idea what you're doing, but you keep doing it. Oh, Gatlinburg's beautiful. Derek, we spent a few days up there last year. I met up with, last September, I think. I met John, him and Mark Dean and all those guys drove up there from Florida, and we flew in from Texas. Gatlinburg is beautiful. I hope you like whiskey, because there is a lot of whiskey in Gatlinburg. So much whiskey. And guys, you're not sure what you're doing, but you see other people finding success with it, and you keep going, you keep plugging. And then you're convinced that you've got this, right? This is right around 30 days. Right around 30 days, the average user says to themselves, "Ooh, I got this. I don't need Apex. Let me drop 10 grand in the market." I was immediately separated from $5,000 over the course of a day. About 20 trades. I had no idea why. I kind of skipped the whole path thing. And then you get a little dejected and you go to this I don't know shit stage. Pardon the French, but that's what the little stars mean. And this is where one of two things is going to happen, guys. You're gonna hang it up, and you're gonna say that Nexgen's full of crap. I didn't take any pictures, and I didn't participate. I never used my spreadsheet. Never even thought about doing market replay, and I didn't ask any questions. And these guys did a horrible job. Right? It happens. That's cool. Whatever. Best of luck. Or you say, all right, He gave me the idea. He told me what I needed to do, and I chose not to do it. He told me that there was a path to getting to where I wanted to be, and I ignored it completely. And every day I remind you guys, when you get to that, I'm upset, but I really want to do this stage, we go back to this, guys. And that's exactly what I did. When I was liberated from my money, it went to you guys that were following rules. My brother sat me down and he said, Mark, I told you to take pictures and you didn't take any. He said, Mark, I told you to fill out the spreadsheet and you never did. And he said, Mark, I told you participate in class. I can't do private sessions when I'm teaching the classroom. Drop it in the room. Let's talk about what you're doing. And he said, you didn't do any of that. So you got exactly what you put into it, right? Nothing. And this is where I made the decision, well, I'm going to embrace the path. I'm going to embrace the idea that there is the right way to do it. And then it just kind of comes into play, guys. But now you don't even have to lose $5,000 anymore. You can blow out a couple Apex accounts and realize that you need to refine what you're doing and have a plan. And this path, this learning path has been true forever, for as long as I can remember. What else? I'm just going to keep posting pictures, guys, until you guys ask a question. I can't guarantee I'm going to say anything too terribly smart. I'll show you the plan that Nexgen's had for the last 2 decades. Identify a termination condition. Pretty big deal. It's 20 years old. If the triggers roll from the high, look for the HVA trade, right, D-Rock? And if it doesn't set up, look for the trend trade when everything is strong. And keep doing that until you hit a termination condition. And then it's either going to break or it's going to reverse. And if it reverses, look for the HVA the other way. And then look for the trend trade the other way. And guys, this is your whole plan. This is what we do every day. Those are 2 great trades. I love HVAs. They don't happen as often. On NASDAQ, they rarely happen. You rarely get a good HVA on the NASDAQ. But I do love one. When a great termination lines up with a high volume area, I just get excited about it. Hey, Mike B, 1940, welcome to the room. Nice to have you. What's that a picture of? That's just a big trade that kept going. There's your path. Rule number 2 for the win. Not a high probability trend trade in there, but Jeremy showed you guys how when you become a chart reader, you can still make money in a range-bound market. Rule number 2 for the win, even against odds favorable momentum, off it goes. Thank goodness you guys knew not to go short even with all that momentum. Rule number 2, right into rule number 2, right into no momentum, right into no favorable large triggers. Gosh, absolutely no rules met. Pretty cool, right? Maybe you caught some of it down to the bottom. Maybe you didn't. Maybe you will one day. We'll see. Guys, is there anything you want to talk about? This is going to be my last question for it, my last request for it. If not, I'm just going to shut it down. I'm going to go find some stuff to do. I'm going to go Christmas shopping or something, or go to the driving range. Is there anything you guys would like to talk about before I call it a day? Because if my brother weren't teaching a class, this is where he would be blowing up my Skype, telling me to stop rambling and force them to ask questions. So I'm going to duck out, guys. Absolutely, Sydney. JW, have a good one. Me too, Bobby. Thanks, guys. Looking at the software. You've been doing it for over a year. The software works. The software works freaking amazing. Sometimes we don't work. Shogun, I don't know what a 213 is. What is that area code? Is that Stockton, California? Thanks for that, Biff. So here's the deal. Shogun, don't tell me what you think's going to happen. Show me pictures and defend it, right? Alinsky, have a good one. Guys, this isn't a class to call out what you think's going to happen. This is the class to take a picture and say, hey, Mark, check it out. My rules are met. This is where I'm going to enter the market, right? Because the last thing that we want is somebody to take a trade on a market when somebody else says, hey, it's going to go. Shogun might be drunk and a pill popper. He's not. We love him. But, guys, we don't call. Don't call trades. Don't ever do it. Don't call anything. You can talk about rules. You can show me pictures with what you think. I love that. We'll talk about it all day long. But I don't want anybody to take a trade based on what somebody else says, right? And Jeremy, amen. If you think it's going to go somewhere, thinking kills me every time. I will. Alan, I'll tell you what, I will make that happen right now.